John Gavin, and panelists Jonathan Salinas, Kendall B. Clark, Allison DePasqua, Tierre Brown, and Austin Becker.
All right, thanks guys. My name is John Gavin. I am more than honored to be able to share the stage with some of the top annuity producers that we have in the company here. But the one thing I want to be clear about is these are great people, but they're not special. Well, they're special in other ways, but in this business, anyone can do what we do. And I know that annuities are there's only 5% of our writing agents write annuities right now, and so we're trying to pump those numbers up. And there's a few reasons for that, but I hope that after these next 3 days, you're going to learn a lot about the products themselves, how we find them, and some cool things the company's doing later on. But I hope that all of you guys leave here after these 3 days just wanting to go find one. Just go find one. It does not matter if you're 80. It doesn't matter if you're 18 years old. Annuities changed my life. I started in this business. I know a lot of you guys struggled to get here this weekend. When I came to my first conference, I was so broke. I paid everything I could to get airfare, the hotel, and had no money for food, so I brought 2 cases of protein bars. So if you guys are struggling and you want to get a jump start on your career, look for annuity opportunities and then ask for help. We have such a great support system here at Family First Life. Your job is just go find the opportunities, ask for help, take the knowledge you're going to get from these folks here, take it into the field with you, find those opportunities, ask for help, see the process, and understand how easy these products really are. My first annuity that I closed when I was broke, I got paid more than I did in the previous year. And so they do make a difference. And so we're gonna go through these people. You're gonna learn a little bit here. You're not gonna learn everything you need to know, but leave this place wanting to know more and wanting to find your first one, because we all started there, okay? I'm gonna start with Tierre. So Tierre, we're talking about annuities, fixed index annuities. That's our bread and butter on the annuity side. Why don't you explain to these folks, what exactly is a fixed index annuity and who is our target audience?
Yeah, for sure. So thanks for having me, of course. Keep it simple. Think of a fixed index annuity simply as a long-term contract between the individual and the insurance company, who's strategizing it simply for retirement, for growth. Now, granted, there are different strategies. You could have income-based products, you could have growth products, but we're gonna keep it simple for today. Now, when people roll over, let's say, old 401ks, retirement accounts, liquid that they may have in the bank, think about this for one moment. A client has $50,000 sitting in the bank. It's gaining, maybe if they're in a high yield savings plan, maybe 4%. They're switching from bank to bank every single year for like their whole life to secure this money. If they put it into a fixed index annuity product, their principal is protected. So foundational things about fixed index annuities is the principal will always be protected. It'll never go down. So something simple I always say is, do you want to be in the market where it's kind of going up or down like an EKG machine? Or do you want to be in a safe place where when the market goes up, you go up? When the market goes down, your principal balance stays protected. Very simple. You're doing more of like a staircase as opposed to an EKG. Now, most of our clients, 65 plus, they know what an EKG machine is. Like, they've had it like happen, right? So they understand that difference. And really, clientele base, you would think it's 59 plus, people that are looking to retire. But a lot of times, I'm finding people that have had a job and that have left the job. So if they've left the job, what did they do with the old account? There's probably people sitting here right now that have left a job and their old retirement account is simply sitting there, doing nothing but getting fees, getting charged, and not going up at all. So I would say the target market, really anybody who's alive, to be honest. But really, I try to target anybody between like, say, 59 to 70, looking to protect their money, because you can't have at, say, 65, 70 years old, your income or your potential income go down. You don't have time.
So what you're saying is our clientele are basically people that like to gain money and not lose it. I mean, that's really who it is. And the older people get, the less tolerance they can have for that sort of thing. So thanks so much, Tierre. Appreciate it. So Kendall, with you, why don't you explain who your first client was and sort of kind of adding on top of what Thierry just said, how did you roll that into finding other opportunities that you capitalized on later?
Absolutely. My first client was my own mother. See, how many of you try to sell to your family, they look at you like, what do you know about life insurance? So my mom lost $27,000 in a month. I said, Mom, at the time she was 77. I said, you can't afford to lose any more. She said, it's going to come back, Kendall. I said, look, Mom, he's just telling you that. She told me something. She said, you've been selling life insurance for 2 weeks. He been doing this for a career. I said, I've been your son for 47 years. Who got your best interest? So I had my mentor drive an hour to her house, sit at her dining room table, for her to think about it and say, nah, I don't want to do it. So I didn't put any pressure on her. She came back like 2 weeks later and said, you think I should do it? So that was my first client. So right now, you got friends, you got family members who don't trust you. Use the expert. My own mother, who I have best interest for, would not listen to me because I had just been doing life insurance. I just started. I was on commercials on TV. Now I'm doing life insurance. So that was my first client. And like Thierry said, 401ks. How many people right now are working at the same job from high school or college? Raise your hand. Nobody. So there's an old 401k just floating out there in space. Those are easy. All you got to do is ask the magic question, what else do you have that acts like life insurance that pays out upon death? Do you have an old 401k that's just floating out there? Those are easy transitions, very easy to find.
Yeah, I think we all end up in the insurance business coming from someplace else. Most of us. I know a lot of younger people are coming in here, but that's where we come from. So there's a lot of floating 401ks out there that we can at least take a look at, and that's how you learn the process. That's how you learn what the products are and how to compare them to what else is out there. Great job. Thanks so much. Allison.
Yes.
I don't think there's anyone better at actually connecting with their clients and understanding what their needs are than you. I've actually been on calls with you and your clients, and they just have full faith, full trust in what you're going to present. Can you kind of walk them through how you build that rapport and how you uncover the actual client's needs?
Yeah, thank you, John. I think that's the most important. I tell all my agents, we are not sales reps, we are problem solvers. Our job is to find the problem and then bring the solution to the client, which I'm a firm believer that that's how we establish trust, and they know that we really do have their best interest in mind. So how does this start? My best advice is to get into annuities the way I did and find the money in your insurance appointments. And when you go through your financial inventory and you're sitting with someone, it's a great way for them to start to trust you, especially if they're going to trust you with their retirement. So when I go through the financial needs inventory, I would always ask the question, listen, John, what do you have that if you were to pass would behave like life insurance? That could be a 401k, IRA, CDs, life insurance itself, and they would be comfortable enough to tell me, okay, I have a 401k, and I would go, that's perfect. You have about 50,000 in there. I always like to use that number because if it's lower, they're not afraid to tell it's lower. And if it's a lot more, they get a little offended that you use that number and they go, no, it's like 200,000. And then in that moment, don't get excited and start to go, look, I got something for this. No, you just say, that's perfect. And I'm assuming that's for your retirement, correct? I'm assigning it off so that I don't get the objection later that they don't need the life insurance policy I'm selling because they have a 401k. So as soon as I assign it off, go through the appointment, meet their needs, close out on the life insurance policy because I'm using that whole time to build trust. So by the end of that appointment, they trust me, they gave me their banking. Now I go back to visit. Listen, John, you know that 401k? How much money can you afford to lose? Well, none of it. That's what I thought. Listen, I have some information that I think might benefit you. Let's set up an appointment to where we can review this together. Go ahead and grab your statement. I'm going to go ahead and run this through with with our retirement planning center, and we're going to go ahead and compare apples to apples, and just come back and show you what some of your options are, so that maybe you can secure what you have. I don't even talk about moving it, rolling it over. I just say, look, just so you can secure what you currently have, and you don't see a risk of loss. That's it. So at that time, booking another appointment, and I would tell all of you, don't worry about, hey, I don't know the products, I'm worried about an annuity appointment. You can reach out to all of us at any time. Everyone's happy to give you information. And knowing the products, honestly, guys, I say the same in life insurance, it's a very small piece to the puzzle, because the biggest thing, like John is right, is the clients trusting that you have their best interest in mind. So go through your life insurance appointment, find the money, get the statement, build that trust, and let them know that you are there to solve their problem. And when you come back to that annuity appointment, the structure, my structure is the same. I'm finding their problem with the funds that they have, what they're using it for, and then I'm building a solution, because at the end of the day, I want my clients to buy me and my solution and know that I have their best interest in mind. And therefore, we're able to look at different products and put them in the right position.
That's awesome. Thank you so much. And the way I look at annuity sales, they're not sales. Annuities are not sales, they're solutions. Because we have people that are concerned with outliving their money, losing money, paying fees, all these other things that we don't have. And so by asking the right questions, you're solving problems, you're not creating sales. So thanks so much. Austin. So Austin was one of the top IUL producers here. And he's done a great job with transitioning and adding a truckload of annuity volume as well too. And so why don't you, because we have such a high volume of IULs being written now, why don't you take a few minutes and explain the transition or the addition of annuities into the IUL business?
Yeah, absolutely. So the increase in IUL production is obviously prominent across the board. Everyone's doing it. And a lot of people, appears to, as a lot of agents kind of still fear the annuities. But if you think about it, the psychology and the intent is still the same. The product is different. The clients are coming to IULs because they've probably tried other things, and they're seeing IULs are being used and proposed for supplemental retirement income strategies, tax advantage strategies, and stuff like that, and also liquidity throughout their life. And so during that time, the client's already there for money strategies. And so when you're going through those presentations and those conversations for the IUL, just be mindful and look out for like 3 different topics. Like when you're seeing why they're there, you identify, hey, do you have anything already like 401ks, IRAs? Have you tried anything for retirement? And then those conversations come up. Market volatility, the IULs are sexy to them because they protect from market losses, so they're thinking of that as well. And all of those conversations that are happening during the IUL can also be extended over to the FIA. Don't pivot and just go sell them an FIA instead. Have those conversations, identify the money, and then see if, hey, maybe the FIA is a better fit. Maybe you have a 55-year-old where an IUL doesn't even make sense. I always like to say that the IUL is new money, FIAs are old money. So like if a client has $100,000 in a bank account, there's a good chance I'm not putting it in an IUL. I just want to protect it, preserve it, compound it, and not have associated fees with it, whereas the IUL is going to come with those added costs. We'll put that in an FIA, but they still have new money. They want to still contribute monthly. We're going to go into the IUL direction where they're putting in $500, $1,000, $2,000 per month. So you have a lot of expansion that you could go both ways with the IUL client because the psychology behind why they're even there in the first place and the intention is identical, and it just transfers right over. And it makes it a very seamless sell. And at the same time, it also makes you not look biased to one product from their perspective. You become more authoritative to where you could you're like recommending this, and you're weighing the options for them. And so you're more of a consultant and not a salesperson. You're like, hey, this may be a better fit because of the scenario you just presented to me. And therefore, it's pretty easy, I would say, to pivot over and just add it to your line of business. Don't stop what you're doing, but add it.
No, never stop what you're doing. And the other part of that too is if you're running IUL leads and run an IUL volume and you come across an opportunity, just ask for help. And there's so many people here that are willing to help you. Thanks so much. Johnny. All right, so I talked about how my first annuity paid me a little bit. What was with us? What was the size of the first annuity that you issued?
$6 million.
$6 million. What was the commission on that?
$324,000.
Say that loud.
$324,000.
$324,000. Okay. What did you do with that money?
So I was able to build my own financial portfolio for my family, invested into private equity, and I started a trucking company.
So he started a trucking company. So it creates residual income as well too. So by doing what he does in selling life insurance, he came across an incredible opportunity. He closed it, he got paid on it, and he was able to invest and build some passive income outside of that, and still give him some seed money for the business as well too. Now with a $6 million annuity, there's obviously a little bit more involved, but not a whole lot more. You've closed smaller ones in the past, right?
Correct.
The process is not a whole lot different, is it? So it doesn't matter the dollar amount, it's the process is really simple. So what is the process for an annuity? So as far as the initial application, suitability, run through that really quickly on what that process looks like.
Yeah, so, getting down with the client, like they had mentioned finding the money, uncovering it, figuring out the client's goals, objectives, running through the application, staying on top of them, following up with them every time there's a status update, making sure you're following the process, keeping up with them. And that way, whenever it's time to, actually roll the money in, it's not so hard to ask for the money because it's already there. You already established that relationship with the client.
Yep. And so I will not guarantee that if you guys make it your mission to go out and write annuities after this and uncover all the money you can, I won't guarantee that you'll ever write a $6 million annuity. But I will guarantee if you don't try, you won't. So it starts with one, and you never know where it's going to go from there. So you guys make it a mission, learn everything you can the 3 days you're here, take it home, put it into action, and then I guarantee some of you will be up here next year. So thank you guys very much.